Hello everyone. Today I am going to provide you with an overview of MCX crude oil from PhillipCapital India. Last week, when crude oil ended at 7086 levels, we have recommended buy and on dip and sell on rise outlook for the week 8th to 12th of August. We have mentioned that the bias continues to be range bound, and on the lower end the major support is at around 6500 mark, while the resistance is at 7650 followed by 8000 levels. Since last few weeks, we have been mentioning that the bias continues to be ranged to down below 8500 mark, expecting levels of 7200 and lower levels. And in line with the view previously in last 3 weeks, we have seen that crude oil has slipped down from the highs of around 9200 mark to the lows of 6944, and it has in the process it has entered into an oversold zone. So last week we were expecting that there can be some kind of pull back from lower levels towards the highs of 7600 mark, and thus we have recommended buy on dip and sell on rise outlook. At the same time, we have mentioned that the positional bias continues to be sell on rise. So any pullback towards 7650, 8000 mark can be looked for selling, expecting lower levels in weeks to come. Now, if we see how things panned out last week, crude oil witnessed some kind of bounce back from the lower levels. So this is a daily chart where we can see that earlier 7000 odd levels has been acting as a decent support since last almost 5 months, and this time also it has taken the support around those levels. Last week it witnessed a pullback from the lows of 6970 to the highs of 7552 levels before ending the week at 7360 levels, up 3.85%. So the last week closing was at around 73590 levels, and we believe that as per the charts here, we can see that the counter is forming higher lows and higher highs pattern, which is not a very positive sign. But at the same time, since it has approached and reached towards the major cluster support zone of 6800 to 7000 mark, so some kind of pullback and bounce back was in line with the view. For the coming week, we believe that 7600 mark can be looked as a crucial level for the crude oil. So 7600 will be a kind of tug of war between bulls and bears. Initially move towards 7600 levels, can be looked for contra trading shorts, keeping strict stop losses. Positionally for this week, 7600 mark, 8000 and 8400. These are the important hurdles on the higher end, which can be looked for contra trading shorts. Reason being, we believe that positionally the bias continues to be range to down. And as we can see here on the charts, from the highs of around 9750, it has corrected towards the lows of 7000 mark and entered into an extreme oversold zone as per the intraday charts oscillators. And thus we are witnessing this pullback, but we believe that post consolidation the bias will be raised to down only. So for the coming week, for the initial days, 7600 will be very important to see and judge the strength of the bulls. So dips should be looked for buying, but 7600 levels need to be held for any kind of fresh short covering and buying interest. And in that scenario, if there is any kind of buying interest, then the counter can move towards 8000 followed by 8400 mark. And as mentioned, all these levels can be looked for contra trading shorts because the positional bias continues to be raised to down below 8400 mark. Immediate support is at 7000 to 6800 levels, followed by positional support of 6500 mark. In line with the view which we have shared, we have figured out few strategies. One was in natural gas, the other was in crude oil. So the strategy was initiated as on 3rd of August. And if we see this strategy, we have recommended buying of 7600 put. At the same time, we have sold 7200 put and 6800 put. We have sold two lots of puts on the lower end. Reason being, we believe that the downside is capped and there will be pullback, and that was the reason we have recommended 7200 put and 6800 put selling at the lower end. In line with the view, in last almost 2 weeks, we have seen that crude initially slipped down below 7000 mark and then bounced back towards 7500 mark. So in the current scenario, last week we have seen the closing, as per the closing rates, our strategy was in plus 11,600 per lot, and as per the payoff diagram here, we can see that anything closing below 7400 mark will be positive for this strategy, and the best case scenario result will be below 7200 mark expiry. The expiry trade is on 17th of August. we believe that this strategy should give some kind of returns to the one who are going to wait till the expiry. Meanwhile, we have already seen decent profits in this strategy before the expiry. The other trade which we got an opportunity was in natural gas. So as on the same date, 3rd of August, when natural gas was trading at 622 levels, we have recommended some kind of buying interest in natural gas, and thus we have initiated a strategy where we have sold 700 put of 24th of August expiry and 620 put we have bought. So this was a kind of typical bullish bias where we have recommended that the bias downside is limited and a pullback can be expected. In line with the view, natural gas has tested the lows of 600 couple of times, and thereafter it witnessed a pullback, and last week it ended at around 698 mark. So as per this strategy, closing over and above 700 mark would have given the maximum returns, which is 66,000 per lot. Last week, as per the closing rate, the profit in this strategy was around 26,563 per lot. So both Nifty, both natural gas as well as crude oil have given us profit in the positional strategies. And in order to, if you find this presentation fruitful and value addition is there, then you can contact us on the given email ID and contact details for further reports and the strategies in days and weeks to come. Thank you very much.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.